Let's get back to oil. So there had been speculation that OPEC Plus would announce a production increase of 500,000 barrels of oil a day, but they went, as I just mentioned, with a modest raise of about 137,000 barrels a day. RBC Capital Markets says, once again, the actual amount of new oil coming on the market will be quite a bit smaller than the headline number, mainly because only the Saudis have big spare capacity at this moment. Helima Croft joins us now, Global Commodity Strategy Head at RBC Capital Markets. Helima, great to see you. Thanks very much indeed for joining us.
Thank you so much for having me on. And we did not think OPEC was going to go forward with 500,000. We thought they would do a modest increase like they did last month when they started unwinding this additional 1.6 million barrel a day voluntary cut. And as you pointed out, again, the numbers we think they're going to be adding to the market is probably less than half of that, because Saudi Arabia is really the only country right now with meaningful spare capacity. So we expect smaller incremental additions. And I think the market we saw responded because they thought that there could be more. But again, it's a small number.
It is interesting that we've heard that quite a bit. And there's also cheating in OPEC Plus, isn't there? So some of this oil is already on the market.
100%. I mean, part of the reason why, again, like they've already drawn down this official 2.2 million barrel a day voluntary cut. And again, it was really largely Saudi barrels and some Emirati and Kuwaiti barrels, because everybody else was essentially already exceeding their official numbers. So basically everybody's barrels are in. The Russian case, we think, is interesting because if you look at this composition of this 1.6 million voluntary cut, the Russians have about a third of that. But there's no expectation that Russian production is going to grow given the Ukrainian attacks on Russian energy infrastructure. We actually think there's a high risk that we could see additional, curtailments of Russian supply on the market. So again, some countries are already overproducing, and then there are countries that might be under production duress.
Talk to us about what you see as a real risk to Russian oil output and or exports. I mean, these Ukrainian drone attacks have been persistent.
I mean, the Ukrainians have been, very, very proficient in innovating drone technology. I mean, the Russians can apparently scale drone production faster, but Ukraine has been able to produce about 2 million drones this year, making up for the, shortfall in weapons from, other countries. And they've really turned their drone attacks on Russian energy infrastructure. And they have a huge incentive to do so because Russia maintains a massive manpower advantage over Ukraine. Russia can recruit about 1,000 people today to fight, largely because they offer significant financial inducements, $40,000 signing bonuses, significant bonuses for your, service, and then death bonuses to your family. And so from the standpoint of the Russians, they've been able to create generational wealth in these more marginalized communities in the hinterlands. And so Ukraine is relying on conscription. They are not recruiting people basically under the age of 27. And so when you think about it, Ukraine has to find a way to cut off Russia's ability to pay for its soldiers.
Sorry, what was that?
That's all energy revenue.
Yes, of course. That's right. What was that? They don't recruit people over or under the age of 27?
Under the age of 27, because they need people working in the drone factories. They need people basically maintaining their Ukrainian economy. So they have an older, military fighting force because of these age restrictions.
That's interesting, because usually militaries, they want guys of 18 to 22. That's the sweet spot for.
No, and again, that is a really, you talk to U.S. military planners and they talk about this sort of age issue on Ukraine as one of the big challenges they face. Again, if Russia is able to continue to pay these very substantial signing bonuses and service bonuses, like that is a really hard challenge for Ukraine to meet. And Russia is not losing on the battlefield. I mean, Russia was able to take nearly twice as much territory from January to June this year as they did last year. So again, if you're Ukraine, you really do need to find a way to blunt Russia's momentum.
You say a debate is raging on whether a serious glut is emerging in the global oil market. What side do you come down on, Helima?
Well, this is an interesting one. So, our base case is that we're going to be amply supplied. But as you see in our notes, we are hearing an interesting alternative view when it comes to China. There is an alternative view out there that China is filling its strategic stockpiles for non-commercial reasons. We've seen significant Chinese buying for the SPR. They still have significant capacity in terms of being able to fill more in the SPR. And we are hearing from, some officials that they believe that that China is making these purchases to de-risk potential supply disruptions coming out of places like Russia from Iran, and even as potential contingency planning for potential conflict with the United States over issues like Taiwan. And so by that school of thought, there might be more room to run when it comes to Chinese purchases than if you just think about it in pure commercial terms.
Oh, that's interesting. So the Chinese, is it clear that they are building up a big stockpile of oil, Helima?
It's clear they have been building a big stockpile of oil. And the question is, why? And one of your very prominent Bloomberg commentators, Javier Blas, had a piece out a couple of weeks ago saying, we just do not know why China is making these purchases. And there are a variety of factors that have been, suggested for this. But this is a big consideration when we think about what the actual demand picture is going to look like. Like, what is China's appetite to continue to make these purchases for their strategic stockpile?
Can you, and this is a very broad question. I was in the Dominican Republic last year. I don't know, was it this year? I think it was this year. Sorry. I was surprised. People were still driving gasoline motorbikes and scooters, so they hadn't gone electric. Yeah. But a lot of countries are, maybe the electricity supply isn't reliable enough. I'm not sure why. But the world is, to some extent, going electric in its transportation. Is that going to be in the next, say, this decade? Will that really weigh on oil consumption?
Well, this is such a great debate because you bring up Dominican Republic, and where people say there's going to be continued strong demand for, oil in terms of transport fuels is in developing nations. And yes, you have China making massive investments in the electrification of its, fleet. And you have, this big push in European capitals to do so. But when you think about, sub-Saharan Africa, when you think about, countries like you raised, like the Dominican Republic, where cost is really an issue, where intermittency is really an issue, that's where you're going to see continued demand for the traditional fossil fuels. And that's where questions about energy access and energy poverty remain really big development issues. And you have leaders in those countries saying that we can't be left behind by being forced into sort of taking on renewables that might be more expensive and have intermittency issues. So I do think there is a debate between the sort of global South and the developed world over what is the suitable energy mix.
Finally, Helima, a year from now, I know this is basically an impossible question to answer. Will world oil prices be higher or lower than now?
I mean, this is again, do you want to strip out all geopolitics from this? Do you want to strip out, that is such an interesting question, because if you could say, okay, the market at this moment looks well supplied, but we also expect that U.S. production will decline in this type of price environment. And we do think, as we will see continued attacks on Russian energy infrastructure and possibly a second Israeli strike on Iran. So we do think that geopolitics is going to remain very, very important. And we also think that OPEC is not in basically hands-off mode, that if there were to be a significant supply glut emerging, we do think that OPEC would potentially step in and reverse course when it comes to production increases and potentially start removing some barrels from the market.
Helima, thank you very much indeed.
Thank you.
Helima Croft is head of global commodity strategy at RBC Capital Markets.